Hello, and welcome to this week's Profit Maximizing Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. I do this with our profit coaching programs and with our tax planning system, which has saved my clients over $6.8 million over the last 5 years, all legally. Love my clients. Actually, we're over 7 million now, easily 7.5 around there. I love my clients, but I don't want to share a jail cell with them. In today's video, see, take a couple weeks off, you forget how to talk. We're going to learn about money mistakes that small business owners make, which will be the finale of the 3 mistake column videos that we've done. By the way, sorry about the last 2 weeks, but going to happen every year. The Thursday came right before the deadline of April 15th, and then I take a little bit of time off. So it's been 2 weeks. So let's see if I can talk. But first, let me try that again. But first, support for today's show comes from Profit Maximizing Publisher, which published my book, The 90-Day Profit Reset, which shows you how to gain your independence from reduced cash flow, shrinking margins, and an evaporating customer base. In this book, you will find chapter after chapter, idea after idea about how you can turn around your business, reset your profits from red to black in 90 days or fewer. Even entrepreneurs who are making money will benefit from this book. This is one of those books that was intended for you to be able to use every month. I mean, at least once a year, where you sit down and make sure that you're doing everything right. Look, took 2 weeks off, so I'm going to do a little bit of a recap. Okay, I'm not going to go over it all. Go watch the last 2, but I listed, and what I'm doing is I'm listing a bunch of articles that are basically along the lines of how common business mistakes hinder you from making the kind of money that you should make. Okay, and what it really comes down to is every time I sit with a new business owner, I say congratulations and my condolences, because they just don't know the wild ride they're on. I congratulate them for being self-employed, because that's definitely financially and emotionally rewarding. Nothing beats the feeling of satisfaction that comes from building a business from scratch that supports you, your family, your employees, and their families. Owning a small business is the essence of the American dream. Nothing else rewards you for your hard work and ingenuity the way owning a small business does. I give them their condolences because they simply don't know what they don't know. And what they don't know causes them to make very many common mistakes. This can be devastating on the business. It can actually destroy it. So, like I said, I've done 2 before, marketing mistakes and management mistakes. Go watch those videos. All right. Today, we're going to talk about money mistakes that small business owners make. Money. It's all about that at the end of the day. But it's not about money. Business is about people. Selling to prospects, creating networks, motivating employees are vital to your success. This is the work that most business owners enjoy and concentrate on. They figure they can just turn the money matters over to their bookkeeper, and CPA, and forget about it. Unfortunately, it doesn't work that way. Business is a numbers game that business owners must become at least reasonably proficient at in order to gain massive profits. Here's some of the common money mistakes that I've seen. All right. First, not reviewing your numbers monthly. It's amazing to me how I have some business owners who see me once a year to do their tax return. It's the first time they know if they made money. I don't know how in today's world, with all the tools that are out there, that's unacceptable. All right. This is literally nothing more important to your success than understanding the critical success numbers and reviewing them regularly. At a bare minimum, it's important to know how much you have in the bank, what your sales are, what products you're selling, who's buying, and how much you owe, and what your profit margins are. A regular review allows you to adjust and correct before small problems become headaches. Okay. Undercharging for your services or products. This is probably one of the major mistakes I've made over my life. Okay. Very few customers buy solely on price. The ones who do, you probably don't want as customers anyways. If you've done a good job marketing your unique selling position, and we've discussed this in the past, we'll discuss it in the future, you should have so you can find that video if I've done it before. You should have no trouble increasing your prices. For many businesses, this is the difference between barely surviving and raking in massive profits. Another one is concentrating only on increasing sales. Too many business owners believe that the more sales they make, the more money they make. It's not always true. Matter of fact, it's often not true. I've seen many businesses grow their way right into bankruptcy. Sales are important, but the bottom line is all that counts. You should be concentrating on profits. Another, not knowing your true product costs. Most businesses know their product costs, but few really know their ABCs. That stands for activity-based costing. It's the total cost of preparing a proposal or bid, getting a sale, delivering the product or service, collecting the receivables, and completing any warranty work or follow-up work. I've worked with many clients who never even knew that they were losing money on a sale. Some were ignoring extremely profitable product lines that actually they just weren't pushing. Not having a cash budget. Cash is king. More businesses fail due to cash crunch than due to lack of customers or profits. A properly prepared cash budget can warn you months in advance of an impending cash crunch. This early warning allows you to plan and look for ways to minimize it. If you don't know how to set one up, get with a CPA, give me a call, whatever. Another one, extending credit too easily. Too many business owners selling credit without doing a credit check. If you're not going to do a credit check, at least get a down payment from all new customers. My experience is those that aren't going to pay later won't be willing to pay now. Now, the opposite, though, is not selling a credit or making it too difficult to get credit. Once burned, many business owners make it too hard for their future customers to obtain credit. This leads to a decrease in sales and missed opportunities. When I was the CFO at a local Coca-Cola bottling company, we gave every new business credit. Many of them couldn't get any credit because they were so new and hadn't established a good history. Heck, they hadn't established a history. Okay. Of course, we kept a close eye on those businesses and cut them off at the first sign of trouble. And we told them up front we were going to cut them off if they had trouble. But this led to many very loyal customers who never even considered switching to Pepsi or somebody else because we had given them a chance to prove themselves when no one else would. Big one hit next, not staying on top of receivables. There's no real secret to keeping receivables under control. All it takes is a regular review of your aging report and staying in contact with your customers who owe you. It is true the squeaky wheel gets the grease. The vendors who call the most usually get paid first. Not taking income tax planning seriously. I said at the beginning, we've saved our clients over $7 million. That's money that went into their pocket, not into the IRS, all legal. There's a lot of things you can do because what you need to consider is income tax is an expense just like every other expense. When managed properly, it can be controlled and even reduced. Many business owners leave that to their tax preparer, many of whom just don't do tax planning at all. Every year I work closely and with my clients and we work to save them money. All right. Key. If your tax preparer is not swamped in November or December, they're not doing year-end tax planning. End of discussion. Falling behind in payroll taxes. All right. Failing to pay payroll taxes is the number one reason why businesses end up in bankruptcy. This is one of the few items that the owner also can be personally liable for, even if they're incorporated. If you can't pay your payroll taxes, then that's not the problem. The problem is something else, and you're just hiding it by not paying it. Having too few customers. And what I mean by that is having one or two customers that represent 95% of your business. Okay. I've seen that. And time again, I've watched businesses fail because their top customer leaves them. When times are good, you should be out getting the next big customer. Most business owners don't even think about attracting the next dream customer until they're desperate. Not outsourcing their bookkeeping. I'm a CPA. Sorry. Let me highlight that because I want to actually add that to something. Anyways, look, not outsourcing their bookkeeping. I'm a CPA and I don't even do my own bookkeeping. Yes, I am lucky that my wife has an accounting degree and is probably better at it than I am when it comes to bookkeeping. But even if I didn't have her, I wouldn't do it myself. It's simply a poor use of my time as the owner. The owner's time should be focused on increasing sales and profits. That's it. Anything that doesn't do there needs to be gotten rid of. This one's a little mundane, but I've seen it bite people in the butt. Not signing all your checks. Once you hire an assistant or bookkeeper, it's very tempting to let them sign checks or give them the credit cards. Don't do it. Signing the checks, no matter how large your business gets, is a crucial step towards reducing fraud and excessive spending. Letting your bookkeeper reconcile your bank account. Look, just Google bookkeeper fraud. And if that doesn't scare you, I don't know what will. All right. Many small business owners lose money to bookkeeper fraud because they give up the basic level of control. If you aren't going to reconcile them yourself, get your CPA to do it for you. Trust me, it costs less than the amount you could lose to fraud. Not backing up computer files. And even worse, I've paid to get them backed up and then found out when I needed them, they weren't backing up. Not testing to make sure that they're being backed up. All right. I highly recommend an off-site, but you can do both. Using the wrong entity for your business. Meet with a business tax expert soon to ensure that you're running your business with the correct entity. I saw a bad choice made by one company that formed as a partnership instead of an S corp. They were paying an extra $45,000 in Social Security taxes that each year, at least the last 2 years I looked at them. Assume they're in business for 10 years. That's $450,000 that they paid to the IRS that should have been used to help them build their business. All right. Overspending. A lot of business owners feel they need to have the best of everything. My rule is if it doesn't affect your bottom line and doesn't expect the, let me try that again. If it doesn't affect your customer's experience, it simply doesn't matter. Get whatever does the job without breaking the bank. All right. Underspending. That's the other side. Like everything, too much of anything is too much is a bad thing. Other business owners refuse to spend money on marketing, educating themselves, new technology, and training. This often restricts their growth and they fall behind their competitors. They also don't want to pay market price for employees. If you hire somebody below market price, you're going to train them, get them up to speed, and you're almost guaranteed once the market fixes itself, they're going to find some place where they will get paid market. So, plus you're probably going to get somebody that's not the same quality. So don't be afraid to do that. Finally, I don't know if it's finally, but another one. Yeah, finally, I thought it was not being a lifetime learner. Our world is changing constantly, and your business needs to be changed with it or to grow and prosper. I've literally reinvented my CPA firm at least 4 or 5 times since I started. This has allowed me to keep growing when many of my business owners simply haven't. All right. I've covered a lot there, and this and the last 2 videos I did should be reviewed to make sure you're not making these mistakes. If nothing, and once you see you are making a mistake, educate yourself. I've covered most of these topics in more detail. Plus, you can get with me on some coaching if you want to. All right. So thank you so much for listening. I'll see you next week with another profit maximizing tip. We should be on schedule unless I take a vacation somewhere, in which case we'll skip a week. But hey, until next time, let's keep working on making this our most profitable year ever. Thank you very much. And